Hi and welcome to this week's weekly market update. The first thing we're going to be doing is, of course, looking to see whether what we talked about in the last few weeks have come good. And it looks like they have, Dennis, which is absolutely fantastic. So well done if you did take advantage of that. And in this week's episode, we're going to be talking, of course, about the lockdown, which is happening as we speak, and how to take advantage of certain stocks, one of which we missed out on last time, but we are not going to miss out on this one. It's a really obvious one. I wonder whether you've thought about it. And then the other thing, of course, by this time you would have known whether Biden or Trump will win, and how to take advantage if Biden wins, or how to take advantage if Trump wins. And then we also have another strategy where it doesn't really matter which one wins, you can take advantage of that. Plus, we find out who Dennis wanted to win all along. No, it wasn't who you wanted to win, who you thought you would win. That and much, much more. So let's get to it. So let's have a look at what happened last week. And let's see. Now we're going to start off with the Ocado Group, because we did say that obviously with the lockdown coming up again, and you wouldn't believe it, I actually ordered Ocado again. I always do it on the day that we shoot this. But anyway, so, and got lots of Marks and Spencer stuff, because of course they have that joint venture with Marks and Spencer's now. We said that this would be a good time to buy. And I think the main reason of this, though, wasn't that it was a Buffalo, Dennis. It was because there was the high and it had fallen a certain percentage according to our VCA strategy. So let's see what happened in that week. That's right, so it had fallen 22% at this stage here. We thought it was a good time to go in according to the strategy, and lo and behold, it is actually up 10%. So congratulations if you did manage to take advantage of that.
But just note as well, right, we wanted to come down more, right? So we're not saying that we wanted to come down more.
No,
we were like, why did it go up? But it did. So that's just the nature of the market.
Yeah. And by the way, it went up 10%, not just because we are such great traders, it's because that's what the market does, and we have a strategy that takes advantage of it. That's the only thing, okay? All right, next one here, what do we have? Decifera Pharmaceuticals. This one was a short, I believe, because it didn't have good fundamentals. That was when we were talking about fundamental versus technicals. Okay, so boom, boom, boom. This one is a Buffalo, vertically falling down. We said it would be good to get in 1% below this mark here.
Initially, actually, we said it was good to get in at this point, but it didn't come down. It went up instead.
Oh, this is the one where we said you can either do it in two stages, here and here, but even better would be if it did this kind of thing, which it did, and let's see what happened then. So remember, a stop order to get in, selling short, with a nice stop loss, I think we said above this point here. Oh, hello. Is this what actually happened then?
This is what actually happened. This is where we are now. So it went up here, right? And at this point, market said, so it was this.
It gets you in.
Exactly, because it had some reversal candles. A bit more advanced, but you can actually look at the candles when there's indecision in the market. Yeah. So this just shows that, well, the market doesn't know if it's going to go higher or lower. So it's the probability is there that it might go lower. And in this case, it actually did as well.
Indecision in the market is if, it doesn't matter what happens to the actual candle itself, but if the open price and the close price stays the same, that normally means that neither the bulls or the bears are winning. That normally means there's indecision in the market. So if something's going bull, 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 indecision, that's what Dennis means by a reverse candle. So there we have a little bit of a profit, Dennis.
Yeah, we do have a little bit of a profit.
Not much, but whatever, 5% or so.
Yeah, and you might say, well, it moves so fast. How can you have time to do all this? Well, every one of these candles is only one day. So this is like a week. You don't do anything. You're kind of sleeping a little bit, right? Just look at it a little bit every now and then.
People think it's trading is like this. It's not. It's about making money. That's what it's all about. Okay, what do we have next?
So next was the Christmas period. Now this is actually Boeing. So
Boeing, or Boeing, as I keep calling it by mistake. Yeah, that's right. And this one here again, daily candle here. We suggested that it is going to be bad with the lockdown coming up. That it's going to be bad because nobody's going to be buying airplane companies because nobody's going to be traveling. So this was a short. Now this one here was a few weeks ago, though, wasn't it? Because I can see the candle here.
This was the 27th of October. Yeah. So this was the day that we placed the order on this. So we got in on this candle here. So let's see what happened. And what happened was the market actually came down quite a bit. So this is a stroke of luck, right? This is just the market is telling us that the probability is it's going to go down. But and this just happened, right? So it's a kind of a probability game.
This is about 20% gain, just so you know. I mean, this is a very, very good risk, 1%, reward. Okay, so it almost came to the 3 to 1. Okay, so you would have made 3% on that. It went to about 2.5, maybe 2 3/4, etc. Stop loss comes down. We lock in this March. If it carries on going down, we put that in and we make our 3 to 1. So that was a good trade, Dennis.
Yeah. So worst case scenario, we will make money.
Aha. And what I love about it is that sometimes it's just common sense, right? You think, well, no one's going to be traveling, therefore no one is going to be buying airplane, blah, blah, blah. And therefore this was kind of a... Yeah, but we use technical analysis as well. We didn't just go in, like blindly.
Then we look at where does it say I'm not going to go further, right? So you see it has one bounce, one bounce, one bounce, one bounce.
Boing,
it just
boing,
keeps
boing,
boing, boing, boing.
Ah, very good. That's why I call it boing. Okay, Boeing. Okay,
right.
next.
So next up we looked at
this is your trade. This is the one where originally, and this is back, when was this? On the October the 20th, you got into this one here. But it was quite long, and I didn't really like the fact that, you didn't have a 3 to 1 ratio here. And we saw last week that though you'd already started going into profit. Was this from last week?
This is last week.
This is from the 27th. So we were like, and then you had dropped your stop loss because you were already in profit, which the green denotes. So this was it originally, then it came down to here, now it's down to here. So 2 movements there, and
yeah, so it's very tempting to take your stop loss or take your profit.
It is,
just
right?
take it.
Take it!
Yeah, because what if it goes up? But then what really happened after this was it came down further. So it was at this point here we looked at this green, but the day after, boom, it was a big sell-off in the market. So this is also a good, almost a 20% move down as well. So this is a 3 to 1 as well. So
20% move.
So now what's interesting is I'm looking for it to go down a bit more. We're going to speak about the election in a bit, but I'm looking to, at this point where there's some support, maybe then move my stop loss down on the short, but then go long to make money going up.
So going long, yeah, exactly. So now he's shorting, right? He's moved his stop loss once, twice, 3 times, locking in those profits. So it looks really, really good. Could go there, and yes, it's tempting to get out now, but no, there's 2 golden rules. One of them is to let your profits run as long as possible. People have a challenge with that one, but if you do, then you'll make so much more money. So you're actually waiting for it to come down even more. Actually, I would be tempted to take the profit now because it's so close to this mark here, but you're going to let it run and then take the profit and then go the opposite direction. So you make money going down and then we're going to make money going up. Unless, of course, it breaks down. But this is what we're looking at here. We're looking at that support level here. Boom, boom. And then the third one will be when it bounces with a stop order, getting him in. Remember, we don't just buy. We make sure it goes in our direction when it's trading with a nice stop loss there. And you will see this reversed. You will see a red there like that, and you will see the green like that. Very good. So what do we have next? This is exciting.
Yeah, next up is Apple. So we looked at Apple as well as an upward trending buffalo. We have the dunk, dunk, dunk 3 times, right? 1, 2, 3, and
remember,
4.
dunk, dunk, dunk is the technical term, of course.
Of course. But what happened with Apple was that it actually broke out.
Broke down. It broke down, right? So that means if you would have gotten in, you would be in a losing trade. In fact, you would be out if you used a stop loss, which of course we did because 1, 2, 3, this would have been the buffalo, okay? Yeah. So if you would have gotten in at this point here, boom, got you in here, this means you would have made a 1% loss on your entire portfolio. 1% loss in order to make 1, 2, 3. We didn't make our 3, so we're in a loss. Then it's broken down. What do we do now? We're out.
Yeah, so, and that's a cliffhanger because we're going to discuss this in the video now as well.
We're going to discuss that. Okay, cliffhanger.
So the last one we're just going to mention is the Bitcoin trade. So
now, you are going to go short on this one, right?
Absolutely.
Okay, but this is now a 4-hour chart. So every one of these, 4 hours, 4 hours, 4 hours, 4 hours. So there we go.
Yeah, we were waiting for it to break down a little bit before we were going to get in.
Remember, it has to get you into the trade, okay? So don't just sell short. And did you get in, Dennis?
No, I didn't manage to because it was at this point here we showed it. And
isn't it interesting how this looks totally different to what you saw just now?
It's this piece here, right? The right piece and the left piece from your point of view. But then it just had carried on going up now. So what I'm doing now is I'm waiting.
So hold on. So what you're saying is it never went below the low of that candle and got you in.
Exactly. It never went down enough because
You seem sad about that, but that's good.
It is good. Yeah.
It's good because it carried on going up, right? What we don't really want to do is go in and then go in a loss. Not that it matters because we would have only risked 1% of our portfolio, so it doesn't matter. But anyway, didn't get him in. So now, what are you doing now?
Now I'm waiting for a breakout because this shows us that it's a solid support. So dunk, 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 right all the way. So I'm waiting for it to close below the blue line here because that's going to signal that we might see a new trend happening. So I'm just waiting patiently, right? Just waiting for it to go down. If it goes up, I'm not going to go short and.
You're not going to go short up here or anything like that?
No, not well.
Because the range probably isn't enough there.
Yeah, exactly.
Okay, everybody else is bullish right now on Bitcoin, by the way, because could this be the start of the new bull market? If it breaks above this point here, I tell you, all bets are off. Now, no, you don't, because, okay,
Could be a fake break.
We read around the subject a lot, and Dennis is convinced we're going to go back to $6.
Not $6,
no, okay,
but I think we're going to go a bit lower.
No, where do you think it's going to go?
I think we might see it go down to 6,000 or something like that. So I think we're going to go down one last time under 10,000.
Wow.
But I'm happy. I'm happy if it continues up because I'm invested both ways.
Okay, so looking at the fundamentals, and what I mean by the fundamentals is looking at what's happening in the markets. For example, PayPal announcing that they were going to now accept Bitcoin. Now, this is just in the US. Next year, that's a big announcement, for a company of that size to be basically saying that Bitcoin is a bona fide way of payment. So for me, yes, it could go down, but if it does, I'd be looking at, you said what? 6,000? No, I think it'll be testing around 11,000, 10,000. I don't think it'll be going below that. I could be wrong. I'm bullish on this, but I actually did take some profits out of my ISAs. Everybody in the UK knows the individual savings accounts. So it took out from mine, from Madrika's, and from the two kids, but I only took out 10%, just milking that cow. We can't have an episode without milking the cow, right? Make sure you milk that cow. Very important.
Because what most people do, they take their profits too early and they take all of it. So then when the bigger move comes, they're never in those big moves.
Which goes against one of the major. There's only two golden rules, right? Remember, I already mentioned this. Let your profits run as long as possible. So, if you take all your profits, then you never get that upside. And so we want to. Maybe I should have gone out a little bit more, maybe with 20%. Anyway. Okay, let's see. But that's in my ISA, in my kind of crypto accounts. I haven't gotten out yet. And I'm thinking that if it does go up a little bit more, then I will probably milk that as well. Okay, so that's it on the recap. I think we're doing really well. And hopefully you're taking advantage of that as well, at least learning something. And let's see what we're going to discuss this week. Okay, so the UK became the latest European country to go into lockdown again. I was really hoping this wouldn't happen. However, I kind of thought it would because of all the hospitals that they were building up, the so-called Nightingale hospitals that were empty. So I figured, okay, they must have built it for a reason. Maybe it was for the second wave. Well, the second wave is here, people. We are going into lockdown. Apart from essential stores, schools and universities, etc., there is a lockdown, which is a real shame because, by the way, Germany and France did it last week. We had to not cancel a German workshop, but we're now doing it virtually. So everybody's at home and we're going to be doing our 2-day workshop from home. And we've got one coming up in November in the UK, which unfortunately now people won't be coming in. It's so much fun when we do them, right?
It's awesome.
It is so awesome. Not only fun, but people placing trades and really getting it and celebrating. But we're going to be doing that virtually. So that's going to be interesting. You can do it from your own home.
And one thing to mention here is there are always two kind of sides of the coin, right? So a lot of people say, oh, not a lockdown, that's terrible. And it is terrible, I agree. But there's so many opportunities out there. So lockdown could mean opportunities.
Let's have a look.
So one of them would be Zoom, for example.
We missed this last time, right? It was an obvious one, I guess. But what we do a lot of our videos on, not videos, like our streaming when we do our actual workshops, virtual workshops, will be Zoom. So that's what a lot of people are doing. And if you look at the chart here, we missed it last time, we're not going to miss it this time. Zoom Video Communications, this is the one-day chart. So what's happening here, Dennis?
So Zoom is down 22% at the moment from the highest point. And we have a strategy where we average as it goes down. So yes, I do want it to go down more, but I think it's a good opportunity to start getting in just because they're doing so well. I was at Heathrow yesterday, obviously with a mask and everything. But there, they actually had this giant sign of a Zoom as well. So it's like Zoom is everywhere now. They're doing so well, while other companies are not doing as well. Which was why we shorted Boeing, for example, as you saw in the preview or the recap from last week. But yes, we're looking at getting into Zoom.
It's very volatile, right? If you look at this gap up and then straight down over the next 5 days, it's interesting. But of course, we love volatility. And as a trader, all it means is that prices go up and down a lot faster, which we like. You know, if you don't know what you're doing, it must be horrific, but to us it is amazing and we love it.
Yeah, it's just like driving a car. If you were getting into a car without knowing anything, I would be scared, right? I would be, wow. But with this, if you know how to drive this vehicle, then it's not going to be, you're not going to be scared because you know what to do if it goes up. You know what to do if it goes down. You know what to do if it carries on down. So you just need to know also.
Know what to do if it gaps up and then carries on the other way. I mean, absolutely. All this is, by the way, it's just closing the gap, which is a normal behavior. That is normal.
I shorted that at the top, actually.
You did?
Yeah.
No, you didn't.
No, I did.
So this is what this line here is there.
Yeah, exactly. That was
yeah,
not all the way
okay.
down,
Yeah, me, I shorted up here and I went, no, I didn't.
I can show you, but
Okay, fine. All right, so next.
So next up is Apple. So the new iPhone 12 has come out. We're going to look at the earnings in just a moment. They were actually good as well. So people are probably might be using more phones, and I think it's a solid company to get into as well.
This is interesting. We know Apple. We love Apple. We know it's a solid company. They're making a lot of money, and also it's been going in a kind of a semi-buffalo formation, kind of up and down, going sideways. And you have several bounces here. You have a couple here. You have the third one here. But also what's happening from this high here, Dennis?
It's down 21%.
Right, so great time to be getting in, although it is at an all-time high. I mean, there is that, of course, to consider. Look, you've got to have... if you're going to get into this one here, would you do it with or without a stop loss, knowing that the elections are... By the way, people are going to be watching this. They already know the election results by the time they're watching this.
Exactly. So it's very exciting. We're going to talk about the election in a moment, but there's two ways to play this, right? So the one way is if you feel a little bit uncertain, you feel, well, I want to be safer. I want to be a bit safer, take a little bit less risk, then it's great to have a stop loss maybe underneath the low of this, because it's telling us that it hasn't really gone below this point, which is around the 104 mark. Maybe a little bit lower. So that could be very safe to do so. But if you feel, Apple, it's a great company, I'm ready to go in if it carries on down, then it might be another story. So it depends on your strategy, I'd say, and maybe your risk appetite as well. But do I think Apple is a solid enough company to get into? Absolutely.
Absolutely. Especially if you use the VCA strategy where you're just going to bring your average price down, eventually you will make money in a company that is making good profit. So this could be a buffalo, in which case you go in with a stop order, gets you in, make sure you have a... So this is going to be your 1, 2, 3. It's close. It's close. You'll have to work it out properly, but on a VCA, certainly. What else do we have, Dennis?
Yes, so the last thing I want to show here, just how to read the earnings here. So on Apple, I don't know, I think you guys can see this, but it was the estimation, because every quarter or so they show their results, right? How is the company actually doing? Are they reaching the targets? Are they doing what they're supposed to do? And then the analyst predicting what's going to happen. So the estimation was they were going to make 0.7, so 70 cents dollars per share, but they actually made 0.73 instead.
It doesn't sound like a lot, right? In fact, it's only this is what we call a positive earnings surprise.
Yes.
Okay, on this particular quarter here. This is just one quarter. This isn't the whole year of the period ending September 2020. And this is something called earnings per share, EPS, earnings per share. And an earnings surprise. Now, why didn't it just then immediately just go up?
It's so interesting because the reason was, and it was the
Went
same.
down.
It was the same with Amazon. They also had great earnings. They made like billions in revenue, but all of them went down. I think Amazon went down 5-6% on the earnings date because it was not as good as they maybe should have been. They were really good. They were positive surprises, and they made a lot of money, but it was not as good. So they all went down in value, which is surprising.
So for me, normally, if it's above what the estimate is, but they must have said something on the earnings announcement. So for example, because otherwise if you think there's an earnings per share positive, then buy the company. If it's negative, sell short the company, right? If only it were that simple. It's not. Because what they say is something like, oh, we've done really well, and then somewhere in the next 45 minutes of their call they go, however, in the next quarter we think, and then everybody starts selling. So it's not just because it's green it goes up, red it goes down. It's not quite as simple as that. Okay, so I think that's it. So what we're saying here is that even though we're going into a lockdown, there are still ways of making money. Do we have something else, or that's it?
Yeah, and then we have this Netflix as well. So what are people going to do if there's another lockdown?
Well, what did you do last time?
Exactly. A lot of people might watch Netflix, and also a great company. It's in this beautiful range.
This is a lovely buffalo right here.
This is lovely. So buffalo. So if it goes down now to this blue line here, this blue nice line, we would probably maybe put a stop loss. We would put a stop loss under this level here, and then hope for it to go up to the top of the range again.
So let's hope that it comes down here. This is one of our things where we're going to review next week to see whether it did. Comes down here, hopefully a nice little bar here, and then we're going to put a stop loss just above there. Sorry, a stop order to get in, to enter just above there. Stop loss, as Dennis says here, so this will be our 1% to make 1 to around 3%. Perfect trade. And also from the high here, this is about what? 20%, 19, 20%.
Yeah.
So what we have here is we have a confluence of two strategies, the Buffalo and the VCA. A little bit like, I think I just made that up, I don't know whether that's the right word, but it means that two of the strategies are converging together. Maybe it's convergence that I meant actually. And the way Apple did just now, so this would be a really good one. If it just came down a tiny little bit more, we're going to jump on Netflix.
And you might say, well, why don't you do that? Why don't you just go in now? It's so close. Well, that's not the strategy, is it? So you need to, if the emotion says, get in now, but you need to be rational. We need to wait for it to come down. But what if it goes up before that? Yeah, then we miss the trade now, and there's 7,000 other stocks to look at.
Exactly.
So it's going to be perfectly fine.
So even though we're going into a lockdown, as you can see, plenty of opportunities. All right, next. Well, I guess we're going to have to talk about the election, since by the time you see this, we'll know the result. Or will we? Because apparently there's this new system where we won't know the actual result because of the ballot papers or whatever. Very confusing. We won't know it for a few months, apparently, by which time Trump would have declared victory either way, I would say. Yeah. So I would love to know, by the way, down below. Oh no, it's too late now, isn't it? There's no point asking people, to say, are you Biden or are you Trump, since you already know the result by this time. Okay, so what can we take advantage of? Now, we've got some stocks we're going to look at in case Biden wins or in case Trump wins. But talk about what Kramer said.
Yeah, so what he said, he's a big famous analyst.
He used to run his own fund before that. Now he's on television.
So what he said is three scenarios here, basically. So the first one is if Trump wins, then that's probably good for the market and will go up. So what he would do is to invest a first batch. He divides into 3 piles, right? So money you are going to allocate. So one now. Get in now before the election in case Trump wins. So you can be part of a little bit the upside. And then the second thing, then, if Biden wins, well, then the market might react down in the shorter term. So then if he wins and the market goes down, then we invest a second batch.
Hopefully at a lower price, and therefore you're going to average down.
And then on Friday, they're going to announce how many jobless claims there are. And if that has gone up dramatically, if more people are without a job, that's also usually bad for the market. So if that happens on Friday and it's bad news, the market might go down a third stage, maybe then before going up. So to summarize, invest the first time now before the election, one time after if Biden wins, just to make sure that you take part of that downside so you can invest a bit lower. And then if the news on Friday are bad as well, then you can invest at an even lower price a third time to really get your average price down.
And you can do that on the companies we were looking at in this video. So for example, we were talking about Apple, we were talking about Netflix, we were talking about Zoom, all of these companies, okay? Let us talk though about what we would see, for example, if Trump were to win.
Right, so if Trump wins, I think one we could take a look at is Caterpillar. It's very good, it's a very good infrastructure company.
You know the Caterpillars, right? So Caterpillars are the I'm doing the movement, but
yeah, the big machines.
The big machines to dig up the ground and stuff like that. I was doing this. I don't know why. What is it? Tractors, stuff like that. No, but they're cranes and no, one of those things that dig up the ground.
Yeah, I know. I don't know what they call.
Anyway, the caterpillar thing.
It's not my first language.
All right.
Yeah, so that could be one, right? So what we're looking at here, we have an upward trend. We're talking a lot about support, and you see it's bouncing, and we're looking for it to come down and maybe bounce another time.
Yeah, it's already a couple of days ago would have been absolutely perfect to do that. Unfortunately, it's already gone back up.
But we're not going to chase the trade. We're going to wait for it to come back down again.
Yeah. Don't get in now. It's too near an all-time high anyway. So therefore, we do really need it to go down. We need to have a stop loss. Stop loss on wherever that, I mean, maybe even here, but let's see where this one falls there. So that is if Trump wins, an infrastructure play. Although having said that, Biden also said he'd invest in the infrastructure, so it might be good either way.
Could be good either way.
This is definitely not a Trump one.
Nope, this is First Solar. So I think Trump is more pro-oil in the sense that he thinks that's going to kind of put his money there.
No, but the reason he's doing that, of course, Trump, it's not that he's not anti the environment or anything per se. Of course, he's a human being. But Trump wants to make sure that, you know, it's all about employment for him.
Yeah,
that's what it's all about.
Yeah, making the country more sustainable in a way. When it comes to jobs and all that. But Biden, on the other hand, he want to go bigger into renewable energy. So a lot of these companies have been doing very well. This is First Solar Incorporated. And it also has a nice upward trend, if you like. You see all the way back down in March.
Which is interesting if you think about it. This is under Trump.
Yeah, it is under Trump, exactly. But it's in anticipation.
Well, I was thinking. So they're thinking, oh, Biden's going to win. Anyway, same as last time. This is even worse, right? Because this really has to come down quite a lot. We can't ever chase a stock. Don't ever do that. Don't get emotional and go, oh, I got to get in before it gets any higher. Use a strategy with rules. What is our rule?
But we're looking at this now, right? So we just put it in your watch list, and that's what we're doing.
Right.
And if it comes down to this blue line, then we're going to look at then going long, which means make money as it goes up. But we're going to wait for it to come down. Most people are investing now, by the way. They're seeing it's going higher and higher. They put their money in, but we want to wait until it comes down a bit before we do anything.
We don't like buying at the top. It's a short recipe to lose money. So let's make sure we don't do that. But otherwise, if, you know, by this time, obviously, you will know who has won, whether it's Trump or Biden. But there's lots of ways to make money either way. So now I'm going to ask Dennis a question he wasn't expecting. Are you ready, Dennis?
I'm ready.
Trump or Biden?
I think Trump will win.
Okay.
Yeah, I do think Trump will win.
I agree.
Yeah, I mean, it's such a difficult, and I don't think we should talk too much about politics here either. But we're gonna.
Well, it's not then.
Yeah, no, exactly.
I was just asking you, who do you think, and we will know whether we're right or wrong. Maybe we're really good at trading, and we're really, really bad at calling elections. How about that?
Maybe, but yeah, I'm not betting on the election. But what I'm doing is I'm taking advantage of. Doesn't matter who wins. I'm going to take advantage of both situations. That's what we can do.
Absolutely, good. All right, so I hope you enjoyed this week's update. So that's this week's market update. Please comment below if you agree or disagree with any of the stocks that we're looking to get into or sell short. Also, if you like this video, please give us a like. We will be very, very thankful indeed. But above all, make sure you hit that subscribe button to make sure that you're continuously receiving these videos on a weekly basis so that you and your family can profit from it.